Okay, thank you very much for joining us for the final session. Just a bit of housekeeping. We are going to, in the interest of time and approaching prayer time, and I think everybody's frame of mind, we're going to combine the last two sessions into one. We're expecting a few more chairs on the stage momentarily, but this will be a very interesting session because many people think of Islamic finance as something that's practiced in the GCC or in Malaysia or in only Muslim countries. So this session here will take a look at some very interesting opportunities around the world where we have offices of Amani and where there's a great deal of interest in Islamic finance. So we're very fortunate to have almost one representative from every country under discussion here. So to moderate the session, we have here from the head of asset management from the International Division of the Public Authority for Social Insurance in Oman, Mr. Ishaq Al-Mawali, who will start off the first part of the presentation, introduce our panelists, two of whom have presentations for you this afternoon. So please join me in welcoming Mr. Ishaq Al-Mawali.
Thank you, Mark. Thank you, Mark, for this opportunity. I think this panel will be about the opportunities in, as Mark mentioned, in three countries, in Australia, South Korea, and Ireland. So basically, Robert and Mark, they have a set of presentation to be provided, and then Noel will be interactive rather than a presentation. Let me first introduce the panel here. Robert, he's from the Amani Advisory, and he started his career as in the commercial sector in the Consulate General of Republic of Korea. He joined Amani in 2008 with Dr. Kim to establish the Sharia finance, and he's a director of Amani in South Korea. Mark, he's basically an executive chairman of Amani in Australia, and he is a lawyer, and he has a degree of Bachelor of Laws and Arts and Master in Law. Noel, he leads the European Advisory Division in Amani, focused in the real estate, renewable energy, and infrastructure. So basically, as I mentioned, the three of them, they will be speaking on their experience. First of all, the opportunities in their respective country, what are the challenges they face, and what are the lessons they learn. So we will start with Robert, and basically South Korea, it is a late comer in Islamic finance. So we'll hear from him the opportunities in South Korea and what are the challenges in South Korea. So Robert, the floor is yours.
Good afternoon, ladies and gentlemen. My name is Robert Yu. I'm the Managing Director of Amani Advisors, South Korea. Besides my duties as a director at Amani Advisors, I'm also an Executive Director at Real Estate Investment Trust, publicly listed REITs at Kospi, our main stock exchange, as well as a director at ACA Investment Korea, which is a private equity fund management company, as well as a director at ACA Amani, which is a full-fledged Sharia-compliant private equity fund management company based out of Malaysia. For today's presentation, I would like to start with a very brief introduction of Korea and its Islamic finance opportunities as well as challenges. Okay, this is a brief snapshot of the first 50 years of the century. In 1897, our kingdom of Joseon Dynasty made a smooth transfer to establish Korea. In 1905, Japanese invaded Korea and forced us to sign and ULSA Treaty, which the Japanese took away our foreign affairs rights. In 1910, a full scale of invasion and colonization by Japan. And in 1945, our independence from Japan. Unfortunately, after the independence, the country has been divided into two, the North Korea and South Korea, and the Korean War broke in 1950. Basically, those are the pictures right after the war, streets of Seoul, the city hall, and so on. And this is the snapshot of Korea today. Basically, we are a population of South Korea today is 50 million. Our landmass is about 100,000 square kilometer, which is about 1/3 of Oman. We have a very strong manufacturing industry, basically in display, shipbuilding, mobile devices, and semiconductors. And the numbers, figures in the brackets are the world market shares. Basically, Korea have no valuable natural resources. You name any valuable natural resource such as gold, silver, diamond, crude oil, iron ore, uranium, aluminum. You name it, Korea don't have it. Basically, we have to import natural resources and put a value-added work, such as manufacturing or processing, and export. So it is very important for us to maintain a trade surplus just to survive in this world economy. Today, Korea is the 9th largest economy in the world in terms of trade volume. And this is due to a very unique characteristics of a typical Korean. Number one is Bali philosophy. Now, Bali is not the resort city in Indonesia, but the word Bali in Korean means quick. So we say it twice, Bali, meaning quicker than quick. So basically, if someone asks something to get done, it needs to be done quicker than quickly. The others, it would be the extreme high expectations. From young, your teachers, your parents, they love you, they care for you, but they are not shy expressing of extremely high expectation from you. So after graduation, you get a job. At work, again, very extremely high expectations, and again, Bali. Now, I would like to touch base on the challenges of Islamic finance in South Korea. This is a picture of a beautiful mosque in Seoul. As Tun Mahathir mentioned this morning, there is 1.6 billion Muslim population in the world. In Korea, there are 70,000 Korean Muslims and about 100,000 foreigners who work and immigrated to Korea who are Muslims. So biggest challenge of Islamic finance in South Korea is basically the general public doesn't know much about Islamic finance and Muslim cultures. In 2007 and 2008, when the world recession started, that's when the government of Korea, the government agencies, the conglomerates, the private sectors, the interest of Islamic finance grew among us because we thought it would be the alternative source of funding during the recession time. So the government, they formed task force teams. They tried to invite scholars, experts in Islamic finance to Korea to give speeches on Islamic finance. And then the government tried to change legislation to be able to practice sukuk or other techniques of Islamic finance in Korea. But again, because of the lack of knowledge on Islamic finance on the general public level, that legislation has not been changed even today. So basically the challenges are sukuk in Korea, the legislation changed I'm afraid will not be happening in a short period of time, so it's still a long way to go. However, to overcome the challenges, we are trying a little bit different ways of adopting Islamic finance. One way is a private equity fund, STIC fund. STIC Investment is a venture capital company as well as private equity management company based in Korea. They have registered Korea's first ever Sharia compliant fund under the Securities Commission of Korea. Amani Group, our group is working with MIFF and COFC. Both are sovereign funds of respective country. We are setting up a Sharia compliant fund as well. Other institutions such as Wuri Bank, they signed an MOU to seek opportunities more in the Middle East. Hanwha Group, because they cannot do business or Sharia compliant business in South Korea, basically they are going out of Korea and try to set up a bank. I believe it's in the approval process by the Malaysian government. So Hana Group will be setting up a Islamic bank in Malaysia. Basically, the last two slides, I'm going to briefly touch on Amani's efforts to set up a Sharia compliant fund in South Korea. Basically, MAFCAP is one of the LP who have, which is a 100% subsidiary or owned by Ministry of Finance of Malaysia. COFC stands for Korean Financial Center. It is 100% owned by the central government of South Korea with a total asset of 54 billion USD. Basically, the history of this fund, early April this year, we have received a letter of intent from MAFCAP to seed 25 million USD. We have also received a confirmation from COFC to match 1-to-1 to MAFCAP's seed investment, so it's a $50 million fund. We have intention for the second closing to raise it up to 100 million USD. Basically, we are that both LPs, the sovereign LPs, will be signing an MOU end of November, and hopefully this launching of this fund will happen in the late or first quarter of next year. Basically, it's a snapshot of the fund. And for tomorrow's session, there is an SME financing, Islamic financing, and SME support session where I will be speaking a little more detailed about this fund. But basically, it's a fund between two sovereign funds, putting in 1-to-1. And this fund is supposed to invest 100% in Malaysian economy, but there needs to be a Korean joint venture partner. The investment target needs to be a joint venture partner between Korean company as well as Malaysian company. So basically, from the Malaysian government point of view, it is a beneficial fund for the country because the 100 million USD will be invested into Malaysian economy, as well as because of the participants of a Korean joint venture partner, there will be a smooth technology transfer into the joint venture in Malaysia. For the Korean sovereign fund point of view, it is also beneficial for Korean sovereign fund because they are helping the Korean small SMEs as well as little larger companies to actually gain access to Malaysian market, and through that Malaysian market, gain more markets in Southeast Asia. Okay, thank you. Thank you.
Thank you, Robert. I think you have managed the time properly. The second presentation will be by Mark. I think Robert, he mentioned the difficulties and the challenges of really promoting the Islamic finance for non-Muslims. The same situation in Australia, because in Australia there are less than 2% of the community as a Muslims. So there is a challenges. Australia is the 5th largest economy in Asia Pacific. So let us hear from Mark on the challenges and the opportunities and challenges in Australia.
Good afternoon, everybody, distinguished guests, Your Excellencies, members of the Judiciary, fellow lawyers and delegates. There's a rich history between Oman and Australia, and it covers two primary subjects. The first subject is education. We've had a number of students from Oman in Australia, and a number have come up to say hello, and a special welcome to you, a special hello to you. There is a second equal relationship between Oman and Australia, and that goes to football. Oman and Australia have a very competitive spirit. We play each other for a World Cup qualifier, and you've beaten us, we've beaten you, there's been a draw, and in March next year, when hopefully my Sharia board will be in Australia, I invite you to come to the World Cup qualifying match in Sydney, and may the best team win. When Dr. Dowd, you'll see my profile in the papers you have before you. I'm a lawyer. I chair the government's biggest enterprise in Australia at the moment. I'm also Deputy Chairman of John Holland, one of the country's largest infrastructure businesses. You'll see the figures there, but we dig holes, we dig the mines, we build the highways, we build the railways in Australia. We're pitching for work in Doha, Hong Kong, China. We are a big infrastructure business. I sit on the takeovers panel, so I'm a fairly serious company director, and I don't take things lightly. But when Dr. Dowd approached me early this year, I'd never heard of Dr. Dowd, I'd never heard of Amani. And he said, Mark, I'd like you to join my board. And I said, what's all this about? And he said, look, you join my board, and you introduce Amani to Australia, and I'll introduce Australia to the world. And hello, world, here we are. The Amani office in Australia is probably the newest of the offices of the group. Our dedicated function is really project origination and transaction management, primarily in the infrastructure and resources space. That is the strength of Australia at the moment. That is the economic strength of Australia. Since I've joined this board and working with my colleagues from KL and elsewhere, we have met with a number of potential partners and looking at a number of projects of interest, and it's some of these that I will discuss with you today. We are on the verge of a financial securities licence. We hope to have secured that in the new year. Excuse me. We hope to have secured that in the new year. We're only focused on certain projects with an IRR of 15% or above, and because of my background as a company director, we will only be looking at quality projects to work with. Excuse me. Okay. I'll get to the point. Australia is part of the Asian region. We are a white country in Southeast Asia. We deal with China, we deal with India, and we have one thing that those two superpowers need. We have resources, and we deal in infrastructure. The main now, to extract a resource, to dig it out of the ground, you need to transport it. And you need to dig it out, you need to dig the hole, you need to build the railway line or build long roads to get it to a port and then take it off to China and India. Now that takes money. And the Australian banks, the big four banks, are at times reluctant to invest too far. So there is an opportunity for yourselves, some of the larger players here today, to consider Australia as an investment destination in infrastructure. Mining equipment, we are considered one of the largest users and suppliers of mining equipment in the world. Property is also high on the agenda. Australia is a fairly strong economy. We will forecast to grow by 3.3% this year and another 3% next year. Whilst Europe and the US are struggling economically, Australia is powering ahead. We are the 5th largest economy in the world. Our unemployment, inflation, interest rates are very controlled, and we have a AAA rating. A particular interest in what is a subject matter that's of compliance is the equipment leasing space or equipment rental. You can see the figures above, $37 billion in infrastructure. $37 billion in equipment funding is what occurred in 2011. Mining, we're in the grip of a mining boom. Demand is high and primarily dedicated and focused towards China. We are the largest producer of bauxite, lead and zinc. We have coal, black and brown coal that we extract and send off to China and India. They are destinations of high importance to Australia. We have significant agreements. Our largest mining companies, Australian Xstrata, BHP, Rio Tinto, are all housed in Australia, and there is significant transactional activity with those nations. There is a banking colleague here. Some colleagues, some friends today said, Mark, banking or infrastructure, what is a more appropriate model for us to consider? Well, the banks have had their challenges. Since the global financial crisis, the banks have had their challenges. But having said that, of the top 23 banks in the world, Australia has 4 in that 23. So again, there's potentially a project there in liquidity. Look, I'm new to Islamic finance. I'm a corporate director. I'm a corporate lawyer. Interestingly, I've sued most of the businesses I've been a director of now. So for me, Islamic finance is new, but I work closely, and my small team works closely with the Malaysian office and the Dubai office, but primarily with Malaysia, with Dr. Dowd and Damshal and Roslan and some other colleagues that some of you may know. We work very closely. We're very close to some significant projects. I invite you to come to Australia and explore it for yourself, and I'll be available afterwards to talk again on anything that's more specific. Thank you.
Thank you, Mark. I think you have really touched upon the very important topic here. I expected you will be talking, since you are a lawyer, you'll be talking a lot about regulation. Now let us fly to Ireland and hear about the Ireland experience. And I think the wish of Ireland is to become a really Islamic finance hub for Europe. So I will invite Noel to talk about it. I think it's the same. He will be covering the opportunities and the challenges and what are the lessons learned in Islamic finance.
Hello. I suppose what I'll do is I'll cover Ireland and also maybe just generally Europe. I suppose one of the reasons why Ireland decided to become the Western or to position itself as a Western hub of Islamic finance is because it has seen how conventional banking has failed miserably in its country and the rest of Europe. However, I suppose just to put it into context, while everybody knows that Europe is in crisis, it is still a country with significant opportunities, a continent with significant opportunities. To phrase it, it's got 500 million consumers and a GDP, combined GDP of 7 trillion. So Europe as a region cannot be ignored. It's a significant bloc. I suppose when you think about Islamic finance and how that could become an alternative to Islamic to conventional banking, maybe just let me explain to you some of my experience. Over the last 3 years, I've been advising the Irish government and the central bank in restructuring the conventional banking system and effectively looking at the lessons learned. How did the problem start? What can we do to salvage the operation, and what can we do to put in place systems that does not repeat the disasters of the last few years? And one of the things that I learned about conventional banking was that it is not principles-based. The conventional banker is interested in earning interest and getting his money back as quickly as possible, but what is significant is that they are not lending to projects. They are not interested in the underlying economics of a transaction. They're interested in lending to you as an individual. So they don't really care how well the project does. They're going to say, well, can you stand back behind the project? So there's a huge reliance on personal guarantees. And during my time in the central bank, when I regularly speak to the governor, I said, well, we have to find a way to change the system. And it was through Amani advisors as a student that I learned that Islamic finance was a fantastic alternative that could be put in place. And through discussions with government officials, strategically the government of Ireland has decided to position Dublin as the Western hub of Islamic finance. So what have they done to do this? So you have to think that Ireland is still very much a European, it is a European country, and it's far removed from Asia and the Middle East. So for that reason, it has always lived with conventional banking, and it knows nothing better. So the government has taken steps. The first thing was that they changed the legislation and the tax rules. So effectively, it is now acceptable for a man on the street to take a mortgage that is Sharia compliant and not get penalized from a tax perspective. So the tax system has been neutralized to facilitate Islamic banking in Ireland. The challenge, of course, is at the end of the day, there is always the perception that it's complex, that it's more expensive, and for that reason, I always believe that it's incumbent upon us who know a lot better in Islamic finance, and I suppose the audience here, to effectively demonstrate that actually it's a viable alternative. And what do I mean by that? When I see in the city of London, and also in some of the bigger countries in Europe, I mean, think about it. Germany and France combined have got a Muslim population of 8 million. Well, when you look at the Muslim population in some of the Middle Eastern countries, that's a significant amount of Muslims in Europe. And when you see Middle Eastern investors and investors from Southeast Asia buying assets in Europe, especially in the city of London and in some of the big German cities, I believe that this is the opportunity for these investors to say, well, we will buy because we are looking for long-term returns, but we would like to structure our transactions in a Sharia-compliant way. And that is where I see the opportunities lying in Europe, that if you're coming to Europe to acquire assets, you should try to see if that can be done through the Sharia in a Sharia-compliant manner. So why come to Europe when there's so much of mess going on? Well, I think that it's very simple economics. You buy low and you sell high, and that's where you make your profit. And of course, Europe being a mature economy, there is no such thing as fast profits or short-term gains. So there are good businesses out there, the good real estate opportunities out there, and if you're patient and you work hard with the business, the entrepreneur, and you support them, I think in the long term, Europe will come back. It has to come back. As I said, it's 500 million consumers. It's a total GDP of 7 trillion. It has no choice but to come back. And I think that if you focus on some of the major economies in Europe, like Germany, France, the UK, and of course Ireland, which is very dependent on the global economy, I think there's significant opportunities for Middle Eastern and Asian investors to deploy their capital into the European space.
Thank you, Noel, for this. I think there is there is information like there is a 20% of all funds that is coming from Middle East. They are based in Ireland, so it is really a hub. And thank you. This is in line with what Dr. Mahathir this morning, he was mentioning that we have the will, if we have the will and we have the power, we can do it. And he just mentioned how the Middle Eastern they are buying assets in Europe. The next speaker will be, may I invite Ibrahim Zahaf. He is from the Chief Executive Officer in Amani, Egypt, and he will be talking about the Libyan experience. So the floor is yours.
Thank you, everyone in the room. I know it's late and everybody is worried when they will go home. But I wanted to speak the last, but since you chose me before Dr. Idris, then I have to excuse you. Yeah. What I want to say here, I would like to speak the last because also I wanted to take the ideas of everyone on stage and conclude it with one sentence. The region that I come from, which is North Africa region, when I've seen what was Korea in 1950s and where is Australia today and before, is the sky is the limit in terms of the opportunities. Because if you've seen the presentation, Korea has no natural resources. While we are speaking in North Africa country, we see countries that are that have the largest reserve of oil and other commodities. We have also a large population in that part of the world. It's representing the 2/3 of the Arab world. However, we have to be realistic. That region is facing a transition period that will affect the growth stage for now. It will slow down for a moment. If we take the consideration of investment, we need a good regulatory framework, and we need to have a stability and steady market to develop this opportunity and create the growth. However, we can think in terms for Islamic finance and consider this niche market. Islamic finance is new to that region, as it is new today in Oman. So we are facing the same experience. However, Oman is more stable. Second, all the products of Islamic finance that is either in the commercial banks or investment banks or in terms of the asset management, maybe for private equity, and also is not available. And the good thing, it's not available in the conventional sector as well. So there is a good advantage for Islamic finance makers to fill that gap, not to compete. So they become a market pioneer. Also, there is a bundle of liquidity in that market in few countries, whereas there is a shortage. So here is a role for some investment banks or the banks to work as an intermediary to transfer the liquidity from the countries that have huge liquidity access into countries that have shortage of liquidity, like countries like Tunis or Morocco or maybe Egypt to a certain extent. So from what I'm trying to express here, that there is a potential, but we have to be patient and we have to develop the ideas and work closely and try to promote the idea of Islamic finance. And the barrier for that before, in my opinion, was a political barrier. It's not a market. The market perception of the Islamic finance, they look for it, is the ideal model that will support the small and medium enterprises, that also will help in terms of microfinance in some countries like Egypt and Morocco. They are in need for that. But the normal consumer for these products will not consider microfinancing unless he sees something Sharia compliant and he feel confident that he can borrow Islamically. And also, we need to see government that are willing to support this industry by putting the right framework. In brief, I think North Africa will be an interesting market for Islamic finance. And as we said, sky is the limit because it has all the success factors if we see a government and businessmen will to develop this industry. Thank you.
Thank you, Ibrahim. And now we'll hear from Dr. Idris, the Chief Executive Officer and Board Member in the Quantum Investment Bank, Dubai.
Bismillahirrahmanirrahim. Thank you very much. Actually, in a previous life, I started as teaching mathematics in university, and by experience I know that the last hours are always very bad for the teacher because no one is following. So that's the first time for me to sort of speak at this time of the day. So I'll try to be very brief and maybe sort of talk about something different. I have few ideas which I thought it would be the right maybe place to talk about, and I would apologize in advance if I'm going to be very blunt and sometimes sort of not aggressive, but trying to put the problems in perspective. We all know what happened in the financial crisis, and there was an utopia before that used to say that Islamic banks were immune from the financial crisis. Islamic banks were protected I recall the days, and maybe some of the panelists here would recall the days where when you ask some normal or retail investors, they would tell you, I would invest in Islamic because it's capital protected, because it's secure. Obviously, we've seen that that was wrong. And in fact, if we analyze deeply what happened during the crisis in the last few years, you will see that the industry got hit sometimes even worse than the conventional area. And I would like to highlight maybe some of the structural problems that we're facing in the industry today. We've heard Dr. Mahathir this morning giving the example of the Jews who started by creating the usury banking, but they didn't call it Jewish banking, they just call it banking in general. And actually, this gave them a flexibility in developing the market. Unfortunately, if we look at the Islamic banking today, and despite all what we hear from innovation, from development, if we analyze the balance sheet of Islamic banks, you will see a bulk of murabahas, wakalas, and another bulk of real estate. Of course, I'm not generalizing here, but this is mainly the two areas of or the two asset classes which are predominantly in the banking sector. If you look at the innovation, or what we call by product development, definitely we hear a lot about innovation, but in reality, it's more cosmetic than real development. And in a sense that if you go today and analyze the contractual relationship between the Islamic bank and the client, you will see that the essence of Islamic banking, which is risk sharing, is not there. We all know that Islamic finance is part of the Islamic economy. So it's just one part of the overall Islamic economy. But unfortunately, what we see is that people systematically trying to sort of imitate what was going on in the conventional by taking the same structures or the same risk-return profiles in the conventional sector and trying to replicate it but in a Sharia-compliant way. So that's what led even some of the industry experts calling Sharia coating, basically. Of course, that was very, they're very present over the last few years, particularly when we see a lot of international banks who are coming to the region talking about Islamic finance and what is the perspective about Islamic finance, etc. Let's not fool ourselves. What made Islamic finance attractive for those banks is purely because Islamic finance sits in an area where there's a lot of liquidity. If there was not this liquidity, no one would, from international banks, would even bother about that. Even if we look at, for instance, countries like UK or other foreign, basically other Western countries who basically changed their laws, made some tax incentives towards Islamic banking, that's not because Islamic banking for them represents a solution or an alternative to normal banking, but because it's going to attract money. This is a reality, unfortunately. I know that doesn't look really very nice, but this is a reality. The problem for our countries is that, unfortunately, if we see the GDPs of our economies, and I'm talking here about GCC and MENA region in general, you will see that the Islamic banking is still not contributing to the real economy as it should be. For instance, the common sector that you will see in the industry would be real estate, or investing into stock markets, or sort of car leasing, etc. So we haven't seen really the Islamic banking playing a role in, for instance, a heavy role in venture capital, for instance, while venture capital is the essence of Islamic banking because this is risk sharing. This is definitely the risk sharing. I mean, if someone would ask me what would be the typical Islamic banking sort of investment scheme, venture capital would be the first one. But unfortunately, it's not widely used. And simply because people, once again, they are strictly focusing on the legal structures, on the Sharia structures, and they forgot that actually the first role of any banking industry is to develop the economy. It's to really go and invest in the real sector. So I don't want to take much of your time, but I want to conclude on one thing. Yes, there is a big interest for the industry. There is a lot of sort of appetite in the market, but I also see some sort of indications. Recently in the market, you might have heard that some of the international banks are pulling out from Islamic banking, which is, in my view, a big red flag to the regulators and the industry experts. And we should ask ourselves why those international banks who came, who invested heavily in infrastructure towards Islamic banking, and now they're pulling out. Well, the answer is very simple. Because when they came with one objective, which was actually making money out of the extra liquidity. If today they cannot do that, they will pull out. So it is our role as local banks or our regional banks to actually direct the industry towards the real sector, towards sort of innovative sectors that would definitely sort of build a strong platform for any newcomers to the industry, and not focus purely on sort of the classical transaction of real estate or stock market speculation, because we all know what happened in the crisis, and usually we say history repeats itself. Thank you.
Thank you, Doctor. I think this is a very transparent and something different from what we heard since morning. So I think each of our speakers, they highlight the experience and the challenges in their own country. Now I leave the floor for the audience to ask questions. Yes, please. A microphone.
Yes, thank you all for very interesting and sometimes contradictory comments. But I will concentrate on 2 points addressed to Marwan and Dr. Idris. Are we here confusing the banking as an industry which is based on guaranteeing the deposits, and that is the essence of it. Is the retail deposits are supposed to be guaranteed under regulatory framework. With investment banking ideas and venture capital, ideas which are actually allowed, but not under regulatory body and framework. For example, any venture capital fund from an Islamic bank can be formed, and it can invest in any sector which the bank thinks is going to be profitable in the future, whether it's in agriculture, industry, education, whatever. So and that is absolutely fine, and that is it's based on risk sharing 100%. It's based on murabaha as we traditionally classically know it. But if banking is meant to be guaranteeing the deposits, then the Islamic banks under the current framework is the only solution available. And we have to really either copy or reform the existing relationship between the depositor and the banks. Just your comments on this. Thank you. For both of you.
Bismillah ar-Rahman ar-Rahim. Well, as I said at the beginning of my presentation, here I'm looking for what I'm really dreaming of. Not now, maybe 5, 10, 15 years from now. But what we're saying today is basically which will give the Islamic banking really that competitive advantage and differentiation and justification for the cost over the current conventional system. Because the key thing here is what is the commodity? In the conventional banking sector, it's very clear. It's the money. I lend you, I earn an interest on this, regardless of the structure, whatever is the structure. Of course, we have all other, commission-based, whatever, on the other products. But the key sort of income there is the interest, basically. Now, what we're saying that at one point of time, in order to convince everybody to come and use the facilities and the services of the Islamic banks in a way that would justify really the risk which I'm taking or the return which I'm looking for, I should challenge that model. And I should allow this risk and profit sharing to work. Now it's not working because the Islamic banks, with all my respects, they are still guaranteeing in a way. Either they say it to you indirectly, even if they don't put it in writing. The central banks are guaranteeing the deposits by the depositors in the Islamic banks. Not only this, I mean, with all my respect, we have seen the sukuk of some very high-profile corporates, being on default. Now, could those people who are the holders of the sukuk walk into these companies and say, okay, these are backed by these assets, I take over now, so I control this building or that port or this company? They cannot. So again, these kind of situations would raise big questions on these sukuks, are they really trustworthy? So unless there is a real Islamic banking, whereby there is a sharing of risk and profit, then the depositors will make much better money, and even the bank will make much better money. I mean, I shouldn't lend you until you, okay, I will share you 7%. No, I will share 50% of whatever you earn, for example. And definitely, like what the doctor has said, Islamic banking is about being a venture capitalist. But not just like this, You have professionals who will come, assess the project, make sure that this person is trustworthy, monitor the performance of this investment, and at the end, share the money, with you, or the returns or the profits. So this is what we are talking about. If we want really to be different and to encourage the others and come to use our Islamic banks, this is what we need to do at some point of time, inshallah.
Actually, I would share the same views. Maybe I'll add 1 or 2 points. The essence of conventional banking is based on a relationship between lender and borrower. And in that relationship, we all know that all the risk is shifted towards the borrower. So in fact, what the bank in a conventional model would do is just channel deposits from depositors to the actually borrower and take its cut. This is basically what a conventional bank do. This model has been in place for a few hundred years now. If you're coming today with a new model or saying we're talking about an alternative, the last thing you want to do is replicate exactly the same relationship, but in a different way. That's the essence. And how do you look at that? If you go and, for instance, check a simple contract of murabaha financing in any bank, you will see that literally, though the bank is buying the asset and selling it to the client, but all the risks are shifted towards the client. Let's not fool ourselves. I think most of the bankers here would at least recognize that. So is there an alternative? No. But the biggest challenge, and I think here this is a very important thing, what we forget is that this relationship entails also a certain way of managing your back office or managing your risk profile as a bank. And for that, the conventional banks, they have all the available tools, derivatives, hedging, swaps, options, etc. Because the bank is an overall sort of it's an overall machine. It's not really just the client fronting desk that we see. And for that, are Islamic banks able to manage this risk relationship in the same way? The answer is no. And we've seen that some of the large banks who were like rising stars in the early 2000, like in the last 10, 15 years, today they are into bankruptcy, simply because a basic failure of managing assets and liabilities. Basic maturity mismatch, which is the day bread and butter for any treasurer. And when you ask the treasury guys, they will tell you, but we don't have instruments, we can't do that. So the problem is in the front, actually. If you are creating an asset class which you are unable to manage at a later stage, then your model is wrong. Literally, I mean, sooner or later, you're going to consume all your capital, and then you're going to turn to the government, just bail me out, or I'm out. So, and unfortunately, we are not paying too much attention to, when we do the asset, how we're going to manage that. But this is also one of the big problems that we are facing. I hope this gives an answer.
Even the microphone, it seems it wants to die. I think we'll take one further question.
Yes, my question is directed to Mark. And so just for everybody here, my name is Shaban Omran, former CEO of Crescent Wealth. And delighted to hear Mark talk about the Australian environment. So just for everybody here, there's close to 500,000 Australian Muslims that account for about 2.5%. And Australian Muslims experienced one of the largest growth rates from 2006 to 2011, 40% increase in the population of Australian Muslims. My question to you, Mark, and first of all, welcome to the Islamic finance industry. You mentioned that you were new, and the industry is extremely grateful for your contribution in coming into the fold. So my question to you is, you know, in Australia we've had the Cronulla riots, we've had issues such as racism. You know, the Muslims are constantly in the newspapers on a daily basis. And you know, my question to you, being new into this industry, do you think Australia is ready for Islamic banking? Do you think there's an issue or a perception issue towards this particular area? Do you think we should perhaps, and this is probably a question for others as well, do you think perhaps we should be pitching this as ethical banking? I know the government has done a lot of work to try and introduce Islamic banking into Australia. National Australian Bank has done a lot of work. There are many institutions who are looking into Islamic banking. But do you think that perhaps for Australia, and I know Turkey uses participation banking, do you think Australia is ready for Islamic banking, and do you think there's an issue with the Islamic word connotation? I'd be interested in your views specifically. As I said, you are new to the industry, and I'd like to open to other members of the panel your thoughts on the concept of ethical banking.
Thank you for your question. Australia is a new country. It's just over 200 years old. It is a multicultural society where there's, since after the First and Second World Wars, many migrants from Europe, Asia and elsewhere moved to Australia. So it's a cauldron, it's a melting pot of multiracial cultures. So I personally, having come into this sector, I personally think ethical banking, Islamic finance, is being welcomed by the highest levels of government. There's various working committees from both sides of Parliament to introduce ethical banking, Islamic banking into the states and federally. I think there's a real appetite there for project finance and Islamic finance, primarily from the stakeholders who are currently in there. They are looking for alternate forms of financing. So I think they're open, the appetite is there, and I'm being personally welcomed, as are my colleagues from KL. We are being personally welcomed into the boardrooms to explain our position and to seek potential partnerships. Now, there have been some racial issues, but I think they're quite well, it could be a reason that they are isolated and they have more to do with the personal economics and as opposed to a more broader subject. But from a corporate sense, I whilst it's also a little bit mysterious, Islamic finance is a little bit mysterious. It's very exciting, and I think we are being welcomed. What Australia does suffer from, though, is the tyranny of distance. We do not. I'm slightly envious of my Omani colleagues because they are within hours of each other, whereas it's a 3-day march to get to where I live. So I'm slightly envious that we are so far away that we cannot access the capital and the IP of Islamic finance. And I would just love to have working next to me my two speakers here, because they are well-renowned and good leaders to have around you. So if we suffer, it's that tyranny of distance, but at the same time, I generally believe Islamic finance is being welcomed as an alternate source of financing. And we do have the resource sector. There is avenues there to participate. So I think there's an open door policy to the concept.
Noel, you want to comment on that, please?
I suppose you could, from an Irish or a European perspective, I don't find that the word Islamic banking brings about any issues or concerns or fear. I suppose the testament to that would be Amani CIMA's and CIMA's collaboration in bringing education and training in Islamic finance. I mean, if it is all about just, I suppose at the end of the day, what's interesting is that there's huge uptake in graduates coming out of college wanting to learn and upskill themselves and wanting to learn about this sector. And I think that's a testament that there is no fear. And the one thing that I find, I mean, just like South Korea, what it went through after the war, I mean, Europe was destroyed by World War II. And it is in their culture to continuously learn and to reinvent themselves. So having gone through the financial crisis, what you find in Europe is that there's a willingness, there's an openness, and there's really an acceptance that Islamic finance is a new area that is growing at a rapid pace, and they have to keep up with it. And what the best way is to learn and educate. So I think genuinely, Europe as an economic bloc will be a major player in Islamic finance, not in the next 5 years, but definitely in a decade or so.
Thank you, Noel. I think we would like to... Robert, you would like, please.
Okay, just a very quick addition from the Korean perspective. As you mentioned, the European like to adapt and make it better. That's actually what Koreans used to do. We copy things and we make it better these days. However, having an Islamic banking system or full scale of Islamic finance in South Korea, basically, we would like to have it, but unfortunately, because of the environment issue, the religious issue, the cultural differences, again, the general public not really know about Islamic culture as well as Muslim culture. It would be very, very challenging to have such a system or Islamic banking to be done in South Korea. So it's a pity thing, but because of the big difference that we have today, we may want to be, not to give up hopes. I mean, through education, through experience, time will hopefully heal that gap.
Thank you. Let us thank our distinguished speakers. And Mark, I think you want to conclude the day.
Okay, thank you very much again, Ishaq, for moderating that session. I think it's a point of great pride from a perspective of Amani to have such a session that with a broad variety of experiences from all different parts of the world brought together in one panel discussion. It's really the essence of a lot of what we do at Amani. So fantastic way to end the day.